From the beginning of time, man has always had a pursuit of the best quality of life possible. That quality of life is not possible without resources. The form of resources we have accumulated has changed over time from cowrie shells, state-controlled money, precious metals, real estate, and stocks and bonds. Over the past 100 years, the world has been dominated by the US dollar and its reserves. But everything that has a beginning also has an end. A new financial revolution is upon us with the emergence of a digital economy. The way we earn, spend, and accumulate resources is fundamentally changing. A new asset has appeared that the wealthy have overlooked. Bitcoin has become the best performing asset of the past decade by far. With only 21 million ever in existence, there are more millionaires and billionaires in the world today than there are Bitcoin. Just by holding 0.25 Bitcoin today will put you in the top 1% asset holders in the world in the next 5 to 10 years. If you would have invested $100,000 in Bitcoin in 2013, today it will be worth more than $15 million. Bitcoin billionaire Raoul Pal says, Bitcoin's performance is so dominant and so all-encompassing that it is going to suck in every single asset narrative dry and spit it out. Never before in my career have I seen a trade so dominant that holding any other assets makes almost no sense. This is not an industry you can afford to ignore. If you want to remain in business, then you must adapt. Are you offering services in Bitcoin? Are you accepting payments with digital currencies? Have you adopted blockchain technology? Blockbuster Video at one point was the most dominant video service in the world. They had the opportunity to be part of Netflix, but they ignored the changing technology. Where is Blockbuster today? Where will you be tomorrow?
But you know, I think about this, and what about this internet thing? Do you know anything about that?
Sure.
What the hell is that exactly?
Well, it's become a place where people are publishing information.
Right.
So everybody can have their own homepage. Companies are there. The latest information. It's wild what's going on. You can send electronic mail to people. It is the big new thing.
Yeah, but you know, it's easy to criticize something you don't fully understand, which is my position here.
Go ahead.
But I can remember a couple of months ago, there was like a big breakthrough announcement that on the internet or on some computer deal, they were going to broadcast a baseball game. You could listen to a baseball game on your computer. And I just thought to myself, does radio ring a bell? You know what I mean?
There's a difference.
There is a difference.
It's not a huge difference.
What is the difference?
But you can listen to the baseball game whenever you want.
Right.
Too.
Oh, I see. So it's stored in one of your memory deals,
Exactly.
and then you can come
That's
back
the
a year
RAM
later.
thing you talked about earlier.
Yeah. Do tape recorders ring a bell? Yeah, I just don't know. What can you, just knowing me the little you know me now, what am I missing here? What do I need?
Well, if you want to learn about the latest cigars or auto racing statistics.
Well, you know, I've got that covered. I subscribe to 2 British magazines devoted entirely to motorsports, and I call the Quaker State Speedline about 2 times a half hour. So now, would the computer give me more than I'm getting that way?
Or you could find other people who have the same unusual interests you do. And
You mean the troubled loner chat room on the internet?
absolutely.
I think one day I'll get one of these deals, but I've played with them, and then you type it in, and then you get that thing, that little arrow. Is that the arrow you move?
Bet.
And then it's just, it's like, oh, I get it. It's an eye test. What do we?
I want to ask a completely different question for you, Tom, because he's our overall ETF maven here. We have seen a spate of new Bitcoin ETF offerings recently, including from BlackRock. Even though everybody knows the SEC and Gary Gensler is completely hostile to the idea, and everybody said, well, they're going to say no. to a Bitcoin ETF, just like they said no to everybody else. But I'm wondering why now? What does BlackRock think they're going to get out of this effort?
You can't get away from your favorite subject here, can
well,
you?
People ask me about it, and I don't have an easy answer for it.
Yeah.
I always think I'm missing something here.
I think you're right. I think your sniffer
you think
usually
I'm missing
is
something?
No. I think you're onto something. I think your sniffer is always really pretty good, Bob. If BlackRock all of a sudden has filed for a Bitcoin ETF that's not futures based, it's spot Bitcoin,
right.
Okay? And Gensler said, no way, that's not going to happen. But at the same time, they're bringing together some pretty good partners from a custody standpoint. They've got Bank of New York Mellon, they've got Coinbase,
right.
They've got an agreement, a surveillance agreement with NASDAQ to help with the security aspect of it. So they're trying to show the SEC that they're putting all the safety provisions in place to give them the confidence, to give them that acceptance of their application. I think the big thing we know is Gensler said, we're not going to do anything there unless we have the exchanges regulated, and Coinbase is not regulated.
But that's my question. Do you think this is going to change their mind? I can't without the clear regulatory authority, and they're not getting a bill through Congress. So now he's just resorted to essentially suing everybody. He's trying to regulate essentially by filing complaints.
Yeah.
I don't see how this changes.
If anybody can get it done, would you bet against BlackRock?
No.
You know, they're the behemoth, right? They're the.
That's why I'm thinking. I still don't quite get.
Yeah.
How are they going to change his mind?
I mean, if they can partner with Coinbase and say, look, you agree to get regulated, what would that do to your business? Imagine institutional investments, just 1% allocation to Coinbase, and what that would mean. We're talking about a lot of money.
Yeah.
So there are a lot of people like you that are saying, is this finally the time? Is it going to happen?
We're going to follow this very carefully, folks, because, again, they're not going to waste their time.
Yeah.
Trust me, BlackRock isn't, if they don't think they have some chance
of
doing something here.
Good morning, everybody. That video, I played those two videos on purpose for those of you that got here early. I played the Bill Gates video about the internet and David Letterman making fun of him. And then I played this video about these panelists, so-called financial experts, trying to wrap their mind around why is BlackRock getting into Bitcoin. That video, 10, 20 years from now, is going to go down as history. And we are here at the beginning. So if you felt, man, I wish I can go back in time when Bill Gates was doing the rounds trying to talk about the benefits of the internet in 1995, and people didn't believe it. Well, you have a second chance, because that's happening right now with crypto, Bitcoin, blockchain technology. As that analyst said at the end, BlackRock is not going to waste their time. And I'm going to play at the end of our crypto talk today, Larry Fink himself. Larry Fink is one of the most financially influential men on the planet. And if he's speaking, we need to pay attention. And where's his focus right now? Well, when I play that video, you'll see everybody's taking notice. So, all right, good morning, everybody. Welcome to our Saturday morning crypto talk. This is Bitcoin Brandon from Los Angeles, California. As it is, I'm the founder and CEO of Ivy League Crypto Academy, ILCA for short. We teach crypto education. We are going on a year and a half, in a little more than a year and a half in business. It'll be 2 years this come January. Saturday mornings, I do crypto talk for the public, but almost every day of the week, I do one for our private community inner circle. So this morning, if you're brand new, you're going to get a sneak peek at what we cover every morning and why. I believe that this is the most transformational, revolutionary financial movements in history at our time. And we're also having a lot of historic things happening. I'm watching the news right now. I'm in Los Angeles, California, and we are having our first ever tropical storm watch warning ever. They're saying the last time something like this kind of happened was 84 years ago. None of my family was even in California 84 years ago. My grandparents didn't come here until the 50s, early 50s, maybe late 40s, early 50s, because they were stationed after World War II, stationed in San Diego and Calabasas. But this is historic. So we're getting ready for that right now. That storm is sitting off the coast of Mexico, Cabo San Lucas, and it should hit. We should start getting the first remnants of it maybe by late tonight, but tomorrow afternoon, and then all day Sunday and Monday. We're supposed to get more rain in one day or 1.5 days than we would in 2 to 3 years. Now, Southern California, yeah, we can use that water. However, we're not used to it. It's a lot of desert and brownness out here. So we're not worried about the wind. We have what's called Santa Ana winds down here in Southern California. What we are worried about, though, is the flooding and the mudslides, all that water hitting. And because of all the fires that we've had, the soil is going to create a runoff. So anybody that lives on the hills, my parents have a house, big house in the hills. So I was with them yesterday. I'll be back with them later today. We got to be careful about that. Anybody in California, Southern California, make sure, we're not used to this. All we think about is earthquakes, but you got your water, you got your flashlights, you got your car fully gassed up, you got your batteries. Make sure all of your cell phone devices are charged up, and if you have portable chargers, make sure they're fully charged up too, so that you can just plug your cell phone into that. I fully expect that we're going to lose. I already got an alert from our internet provider that we're probably going to lose service and we might lose power. So make sure you've got flashlights all over the place ready to go. So we're ready to go. Although if we lose internet, my family's they're gonna lose their mind because they can't survive without Wi-Fi. But it'll be okay. It'll be good just for 24 hours. So anyways, that also reminds me too, I will still attempt to do a VARA presentation tomorrow night, but I don't know if, how the power is going to be. And then we got my kids that start school Monday. So we got to figure out how they're going to do that. First day of school. My kid's like, do I get to stay home? No. Some water's coming out the sky. You're still going to school. So all good, all good. We're just getting prepared for that. So go ahead and type in the chat box where you're listening in from. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, share information for educational, training, and entertainment purposes only, and it is up to you to make your own informed, intelligent decision on which direction you want to move into. I see Martha from Mexico. I know, Martha, you are hearing about this because the hurricane is down there right now, Hurricane Hillary. I see Martha, also Demetrius Turner, good morning. Melissa from the UK. DJ, good morning from Colorado. Tracy Owens from Middle River, Maryland. Jacqueline from St. Petersburg, Florida. Daryl Weston from Texas. Kenny Taylor from LA. I know, Kenny, you getting ready. And the path that this thing is going, I see it shifted a little bit. But really what's going to take the brunt will be East LA County. That's where I am. And they said literally Pomona. Pomona's 5 minutes from me. But East LA County, San Bernardino, Riverside County, and the desert. And also they're getting warning alerts for Nevada. So it's a wide stretch. See, Mr. Albert, good morning. Stan Thompson from Elon, North Carolina. Marnita Casa from Colorado. Michael Pendleton from Maryland. A hurricane in Southern California. I know Jesus is on his way back, huh? Janelle from Colorado. Kevin Strausser from Georgia. Dagmar from Lake Arrowhead. Hey, Dagmar, are you in Lake Arrowhead? I mean, you've been traveling around a lot. You guys getting ready for this because you are right in that path. of this. Marty Bali from Victoria, Texas. Neil Brooks from Richmond, Virginia. Judy from Toronto, Canada. See, Facebook user, hello from Anguilla. JJ Brazil from Auburn, Alabama. Jamal from Jamal and Krishna, Pasadena, California. I know you guys are getting ready for this record-breaking storm that's coming our way. Michelle, sorry, I will mess up your last name if I attempt to say that. Veritieri, there we go, Michelle. From Raleigh, North Carolina. Patty Geis, good morning. Carolyn from OMAC. Facebook user, you grew up in Pomona, really? All right, what high school did you go to? Pomona High or Gary? I went to Damien High School. See, Ann Perez, ROC. Yeah, Dagmar, you're like, not looking forward to this. You guys ready up there? Batten down the hatches and everything. All right, I got it right, Michelle. All right, fantastic. Now you went to Gary High School. Yep, yeah, we used to dominate Gary. What years were you down in Pomona? Like I went to Damien High School. I graduated in 94. Oh my gosh, it made me seem so freaking old. 94. Let's see. Anna Clark from Dominica. Good morning, good morning. Mr. Herschel Crow from Texas. Good morning, everybody. We are also streaming live on all of the Facebook groups, YouTube, Twitter. You were there 81 to 84. Okay. Have you been down here lately? A lot has changed since then. A lot. Adolph Hayes. I see you, Adolph Hayes, and Tammy Renee Lee Gully. Good morning. Good morning. Well, a lot of you guys came on late and you missed the videos that I played, but it's all good. I will play the Black Rock video at the end of Larry Fink. We're going to be watching him very closely. We are at a turning point in the crypto space since I got involved in 2016. I now see the cutoff zone. We're now getting into the fourth quarter of where mass adoption is upon us. Things are going to change and it's never going to be the same again. And we have a small window of opportunity to make sure that we are well positioned for our families to take full advantage of what's about to happen before the wealthy people do. And they are. As Jim Rohn says, the goal is to create a financial wall around your family and your house so high that nothing can penetrate it. Rohan, you're in Santo Domingo, huh? All right, what are you out there traveling? All right, Rohan. So let's get into some crypto news today, and let me get this set to share screen. I always got to remember I'm using StreamYard this morning, so it can be a little funny. StreamYard. All right. If the screen on your side does not come out right, let me know. I'm Michelle, your class of 90. I'm class of 94. Yeah, Manny, the biggest impact should be the rain and flooding in the path. That's right. Right now it's a category 3. By the time it reaches us, it won't even be a hurricane. It'll just be tropical storm. We can handle the wind, but it's that flooding, the mudslides. I expect there to be a lot of, we're going to see it all over the news about issues and rock slides and all that. All right. So crypto market cap right now is at, let me make sure refresh. Things are always changing here with us. All right. So it's down 0.3% in the last 24 hours. That's a slight drop. Bitcoin dominance is at 46.2%. Okay. This is dropping even further. That means that the altcoins are taking a bigger hit than Bitcoin is. Ethereum has stayed the same. It's moving with the market, but it isn't losing any of its position, 18.3%. But Bitcoin has shifted. It was over 47. Now it's at 46.2. Let's see. Actually, no, then Bitcoin took a hit. For it to be at 46.2, Bitcoin took a hit. Let's take a look down here. And by the way, guys, on the Inner Circle, this coming Monday, I'm going to go back. I haven't done it all year. We're going to do a training on how to read this chart and how to investigate coins and projects that you hear other people talking about that you don't know who they are. You know, I never rely on anybody else to tell me. I do my own research. So we're going to show how to do that. That will be Monday morning for our Inner Circle. But Bitcoin, $26,000. Okay, so we got to look at since the last public one was last Saturday, we got to look week to week. So we've lost 11.6% in Bitcoin in the last week. What have I been saying, guys? Those of you in the Inner Circle, what was I saying? I said this needs to drop big time, at least one more time before halving next year. So I am not surprised by this. My bottom, and people might freak out about it, but my bottom is a $15,000 Bitcoin before we see it reach new all-time highs. Others are saying anywhere between 22 to 23,000 is going to be the new bottom. I'm going further below that, so I'm preparing for that. Ethereum also dropped 10% in the past week. BNB dropped 10.4%. Ripple dropped 18.3%, so 51%. But it stabled itself out. It popped up 1.9%. Yeah, because people are buying the dip. So I already have a note there. Yeah, I had a note there. Buy more Ripple. I wrote that on the 16th when it was at 59 cents. And I did. So now I'm going to do it again. Today is the 19th. Buy more XRP. Current price now is 51 cents. All right. Then I've got here, let's see, Cardano's dropped by 8.9. Lido staked 10.2. So everyone's been asking me, Brandon, why the market has dropped? I can't put my finger on one real issue, but we will look at some articles to see if we can find it, if anyone's talking about it. Dogecoin dropped 17.3. Solana 11.9. Whoa, here's one. The Shiba Inu and Litecoin both down 23% for the week. Well, you're going lower than me, Melissa. You're saying 10 to 12K Bitcoin? I'm not willing to go that low, but I wouldn't be surprised if it did. Okay, because they want to shake the wealthy want to shake the hands of the retail investors. But what we learned in Crypto Talk earlier this week in our Inner Circle, that people aren't as stupid this time around as they were back in 2017. And they see the pattern. They're not selling. We actually are having a Bitcoin supply crunch right now. So that's why this can go either way. BlackRock is throwing a monkey wrench in what is normal. Let's take a look at the best performers over the past week. Thorchain Rune. I do not own this. Thorchain Rune is up 47.1% in the last 7 days. Hedera is up 13.2% in the last 7 days. Radix 4.2, Injective 3.5, and that's about it. So I don't know why these two popped up. The worst performers in the last 24 hours. We got Roll Bitcoin down 26.3%, Litecoin down 23.5%, Shiba Inu. So these are double digits in the 20% losses. Rollbit, Litecoin, Shiba Inu, ApeCoin, Uniswap, EOS, Axie Infinity, Flow, Bitcoin Cash, XRP, Sandbox, Decentraland, Sui, Stacks. Okay, now we've been looking at WorldCoin too. Let me see what their numbers are. Oops. What the what? What's going on my keyboard? Whoa. I've never experienced this before. I'm hitting W and that mark comes up. Cancel off. What the? I've never in my life. I hit T and D comes up. Let me stop share for a second. There we go. Okay, now I'll share screen. Why did it do that? All right, share screen. Okay, that was weird. I never saw that before. All right, oh, WorldCoin is slipping. It's now down to 160. Lost 4% in the last 24 hours. Is at $1.48. Okay, so we're experimenting with that one to see what happens with the whole WorldCoin project. Those in the inner circle know what I'm talking about. This is also a project of mine because I don't trust them one bit. Some devious stuff going on behind the scenes with WorldCoin. All right, so let's take a look at some of the news. See if we can find out why is the market slipping this week. The only major news this week coming up, I mean, we've got Japan and South Korean leaders are with Biden. We've got this upcoming week. Oh, we've got the BRICS Nations Summit in South Africa on the 22nd. I'll be watching that very closely. We've got the Republican primaries debates this week. Kids going back to school. What else? What else is happening? The wildfire in Hawaii. We've got wildfires in Canada. Oh, yeah. 19 people need to be turning themselves into Georgia for the court case with Trump. But nothing that I see that can impact the market, though. All right. Here's when Bitcoin could bottom out after crypto market downturn. All right. So let's see their prediction. The co-founders of the crypto analytics firm Glassnode believe that a Bitcoin bottom could form after one of two things occur following the market downturn. Glassnode co-founders Jan Happel and Jan Alleman, who share the Negentropic handle, tell their 56,000 artists formerly known as Twitter X followers that they are looking at two scenarios where Bitcoin could carve a local bottom. According to Happel and Alleman, Bitcoin could either gradually drop to the $25,000 range or witness a severe liquidation event before bottoming out. Bitcoin risk signal at 100, two possible short-term scenarios, a slow bleed to 24,800, 25,000. That means like what we're seeing right now, over the next week, it just keeps dropping by 0.5%, 1%, 1.5%, continues to slow bleed down to 23, 24,000 or 24,000, 25,000. We're almost right at the 25,900 mark. Fast, aggressive wick that gets bought up fast. Either way will bottom out shortly after one plays out. We've seen these two scenarios play out in the past whenever the Bitcoin risk signal hits 100. So it's the short-term bearish trend. Okay. Looking at the analyst chart, it appears that Bitcoin tends to witness a corrective move when the risk signal hits 100. Synonymous crypto strategist Rect Capital is also weighing in on BTC. According to the analyst, Bitcoin looks weak after printing a bearish double top pattern. It took Bitcoin 91 days to form the first half of the double top and only 63 days to form the second half of the double top. So what's the takeaway? The first half dropped in price in a step-by-step manner, respecting supports but ultimately breaking them, the green box. This recent crash didn't care about any supports on the way down. There was no reaction whatsoever. Just shows how weak the buy-side pressure is around the orange boxed region. Buys aren't ready or strong enough to properly step in and change the course of price action. And current volume level suggests seller pressure hasn't even reached its peak yet. Yeah, because nobody's selling it. That's the problem. You know, people are holding on to their Bitcoin this time around. Bitcoin is trading for 26,000 at time of writing, down 2.3% in the last 24 hours. Okay, but you didn't say why. You're predicting when or how low it can go. What's this one here? Bitcoin secondary scare now playing out, warns top analyst Benjamin Cohen. Now, he's pretty good, Benjamin Cohen. Here's how low Bitcoin could plunge. Okay, let's see if they get my numbers, or he says 24,002. Crypto strategist Benjamin Cohen says Bitcoin could fall further even after correcting by over 15% from its 2023 high reached last month. Cohen tells his YouTube subscribers that the current crypto downturn is in line with a pattern that occurs every 4 years. Yeah. The idea behind the secondary scare in crypto comes from the fact that the S&P 500 stock index tends to get a correction in August or September of its U.S. pre-election year. That is true, but there's another thing you got to think about here. We've got the Fed raising interest rates, and we're trying to fight off inflation at the same time. So if you were to look at 2023, you can see that the S&P is in fact getting this correction that we talked about. Now, the last one, we were dealing with COVID at the same time. Wasn't natural. So the S&P 500 is down a little over 5% since the start of August. According to the widely followed crypto strategist, Bitcoin has plummeted by between 39% and 83% during previous secondary scares. In 2019, once the secondary scare got underway, once we got below the 20-week moving average, right, or the weekly candle that led us below it, Bitcoin dropped another 61%. See, this is my only problem with these guys. Yeah, all they're doing is reading the charts, and that's not bad. That's okay. But you've got to factor in what the charts can't tell you. What's going on in the world? This is why I always cover geopolitics and natural disasters or man-made disasters. You know, what's happening in the world that can impact people's behavior, because it's people's behavior that move this. So if all you're doing is reading the charts, you're going to miss. So I want to see if they take anything into account. This one in 2015, it was about a 40% or 39% drop. And then in 2011, you had an 82.5% drop before we actually finally bottomed out in the secondary scare. In all three cases, in the pre-halving year, the S&P dropped in third quarter of the pre-election year. And then Bitcoin entered into a downtrend for a while. And we have three examples. One where we went down about 80%, one where we went down about 40%, and one more we went down about 60%. So how low Bitcoin could fall, going by historical precedent, Cohen outlines three scenarios. Okay, if it's a 40% drop similar to 2015, 40% drop puts Bitcoin at there we go, 17,500. What did I say? I said 15K. Right, close. That would be the lowest. This would basically correspond to this. So he's just reading the charts. So the charts, by going off of that, he's predicting 17,500. I'm doing more than just reading the charts. I'm reading the charts and I'm looking at what's going on in the world. human behavior, which is why I'm going down to 15,000, because I'm also looking at the ETFs are coming online. And the wealthy people, they want to buy Bitcoin. Let me ask you guys this question. This is common sense. If you were an investor that you've been watching Bitcoin, but you haven't bought any of it because you don't believe it's secure and safe, and then BlackRock comes into the space and they're going to provide you the security and the ability to get in on crypto without having to actually purchase it yourself and put yourself at risk. Would you want to be able to get Bitcoin at a $25,000 price or a $15,000 price? The lower. We saw this happen last time with the Chicago Mercantile Exchange and the CBOE in Chicago, 2017, December 17th. The wealthy manipulated the market and they bought the dip. I see no reason why that's going to change this time around. I believe they're going to force the market to drop. They're going to force all the uneducated people that get fear of loss and scare tactics. They're going to sell their positions, and the wealthy are going to buy it on the dip. That's just my opinion, because you got to put yourself in the head of a wealthy person. How they think. Why am I going to buy it at the high? So that's why I say 15K. But he says 17,500 would be the lowest. This would basically correspond to this 2015 move that would put Bitcoin at 17,500. A 61% drop, which is what we experienced in 2019, will put it at around 11,400. Now, there were other things going on in 2019. We had a wild presidential election. The country was in a tailspin, so to speak. We were not united. We had COVID, and we had a wild presidential election coming up. So that brought a 61% drop. We had an 80% drop, would put it much lower. So he's saying if we have a 61% drop, it can go all the way down to 11,400. Now that's what Melissa from the UK, her numbers, 10 to 12K. I wouldn't be surprised if that happens. The only reason I don't think it can go that low is because of the supply crunch. And this time around, Bitcoiners learned their lesson. Enough of them did, and they're not trying to sell their positions. They're holding. So when you have supply and demand, there's the price has to go up when there's higher demand than there is supply. So I don't think it will go this low. Something really crazy would have to happen in the financial markets, like whether it's a natural or man-made disaster. But I wouldn't be shocked if that happened. An 80% drop will put it even much lower, which I will say I don't think it's going to go nearly that low. I agree with that. That's crazy. I don't think this can go an 80% drop. The community is much more in tune now than it was 4 years ago. All right. So you guys got the numbers. So what do you do with this information? See, this is why education is key. Education is everything. Our community, our inner circle, we know what to do. I'll give a hint. If I start seeing this thing really sliding, then it's the tether game. I'm putting everything in stablecoin, and then I'm going to wait for it to bottom out, and then I'll move back in. Well, not everything, 50%. I'll do a 50% move back into Tether or USDC, and then wait for it to turn around, and then I'll buy back in. That's a good way to flip it. I don't want to ride it all the way down. Stupid Nugent is forcing me to ride my Ethereum all the way down. That has me upset right now, but there's nothing I can do about that. I can make a fortune off of that right now. Good grief. All right. Next up, payments giant Mastercard launches new program with Ripple and other firms to foster collaboration on CBDC. Now, we've been talking a lot about Ripple and what their role is with the banks of the world, the governments of the world, cross-border transactions. But now they've launched a new payments program with Mastercard. Isn't that interesting? And other firms to help bring in CBDCs. This is why I am buying up Ripple right now. Ripple is very undervalued. Regular price of Ripple right now should be anywhere between $4 to $5 a coin right now. That's what it should be. We're at 51 cents. So when this whole SEC thing that's hanging over them is finally put to rest, that rubber band that's been tightening on Ripple is going to snap, and we're going to see a boomerang straight up. But it hasn't happened yet, which is fine. That gives us more time to accumulate. In a statement, Mastercard announced the launch of the CBDC Partner Program, an initiative that aims to engage key players to drive CBDC innovation and efficiency. To bring a greater understanding of the benefits and limitations of CBDCs and how to implement them in a way that is safe, seamless, and useful, Mastercard is convening a group of leading blockchain technology and payment service providers to join its new CBDC Partner Program. Now, let's stop right there, for example. We already know that more than 80% of countries on the planet is either researching, planning, or already launched their own CBDC. And for those of you who don't know what that means, that is a central bank digital currency. It is not crypto. The Fed coin, they're going to take your money and digitize it. I am not for this. I do not believe that CBDC will be good. I think it will be convenient, but it is also a loss of privacy, big time. You see, I can take this $100 and I can go spend it wherever I want, and there's no record of that I bought anything unless I give my receipt to somebody. But if I'm using my debit card or any Visa card, there's a record. You can have it. No, cancel that. There's a record of this, and the government can track that. And then what if they say, "Oh yeah, we're freezing your account," or "We don't like what you're buying. We don't like that you are buying guns. We don't like that you are on the flip side using money for abortions. We don't like that you're you submitted for unemployment, yet you're buying a flat big screen TV at Walmart. That's irresponsible." It doesn't matter what you believe. The fact that the government will have the ability to prevent you from spending your money how you would like to spend your money is the problem. So my grandpa back in the day didn't believe in banks. He's like, "I'm not giving my money to anybody." My grandpa understood self-custody. He said, if the money is in my hands, I control it. I give it to the banks, it's not my money anymore. I got to get permission from them to spend my own money. Grandpa was onto something back then. But is it really safe to put all your money in a jar and bury it in the backyard or have it in under your mattress? It's not really safe to do that. But Mastercard's inaugural partners in the program include blockchain-based digital payment network Ripple, Web3 software company Consensus, technical consultancy firm Consult Hyperion, digital asset operations firm Fireblocks, CBDC marketplace platform Fluency, security technology group Gysect plus Devrient, and digital identity technology provider Edemia. Does this sound like a company that is afraid of the SEC? Does this sound like a company that is about to go out of business? Or are they ramping it up? The SEC is just a temporary, roadblock right now. But they know down the road. So if these governments are trying to bring out their CBDC, what network are they going to use? If you go back in the day, and this is for those of you who got into crypto before 2017, the crypto community did not like Ripple. In fact, the crypto community did not consider Ripple a crypto token because the whole idea around crypto is to be decentralized, whereas XRP is run by a company called Ripple Labs. So it may look like it's decentralized, but it's the most centralized blockchain out there. And their partnerships and what it's designed to do with the banks and the governments seems to be at odds with what the crypto community says what crypto is all about. So I am not surprised you've got banks, you've got businesses, you've got Mastercard, they're all partnering with Ripple. So it doesn't matter if I like it or not, I can profit from it, knowing that this is happening. By assembling the strengths, deep expertise, and different capabilities of these partners, we can drive innovation in the central banking community. See, again, there you go. What did I just say? Crypto's supposed to be decentralized, but here we got Ripple. By assembling the strengths, deep expertise, and different capabilities of these partners, we can drive innovation in the central banking community and along the CBDC value chain as the space continues to evolve. The crypto space does not like CBDC. They say there's no need for it. We have stable coins. Yet Ripple is out there trying to push and provide the services for CBDC. That's why I said ultimately, SEC is not going to win this. There's an agenda going on behind the scenes. Ripple will survive. Mastercard is rolling out the program amid increased interest in CBDCs around the globe. Citing data from the Bank for International Settlements, the payment firm says 93% of central banks are engaged in CBDC-related development. So when you have somebody say, "Oh, I don't believe in crypto, cash is king," really? Why don't you type in the name of your bank and then CBDC or blockchain or metaverse in Google and see what pops up? 93% of the central banks are engaged in this. So when you hear me say all the time, when I had my aha moment in 2017, that blockchain technology is going to disrupt every single industry on the planet, whether you like it or not, believe it or not, trust it or not, your opinion is irrelevant. You will be involved either directly or indirectly. Well, 93% of all the banks is involved, which means whether you like it or not, so are you. And you don't have a say in this. All you can do is get yourself educated so you know how to maneuver in this space and profit from it, not be a victim of it. All right, let's see what other interesting articles we got here. What is scalping in crypto and how does scalp trading work? This is my man James R. Davis's field here. I learned how to scalp back in 2017. So what is this? Scalping focuses on making money off of slight price swings. This is for the short-term day traders. This is not about holding tokens long-term. In fact, it doesn't even matter what the token is. All that matters is what are the percentages? What is the volatility looking like? Remember last December and January for our inner circle when we were doing live trades on LBank, and I told you guys, we're not looking for what projects is going to be here long term. We're looking for projects that have a lot of volatility from day to day on it. because that's where we can get the most amount of our money. 2%, 5%, 10%, 3%. So it doesn't matter the token. Doesn't care. So this is what this is. Scalpers use this method to reap quick gains from reselling assets. This is when I first got started, how I flipped $30 into six figures in 3.5 months. I was scalping. I wasn't trying to build my portfolio at that time. I was just making money. So although cryptocurrencies are known for their volatility, they give traders various opportunities to pocket and reinvest the gains. Scalp trading is a crypto strategy that helps scalpers to take risks and make the most of frequent, price fluctuations by observing price movements. You know where all the scalpers are at right now? A failed project called Terra Luna. I used to have this and thought it was going to be a long-term project, and they failed. Yet people are still trading on it. The project is dead, but there's still a lot of liquidity here. People are still trading on this. Look at this trading volume, 26 million. These are scalpers doing this and making a boatload of money off of it every day. And this project is dead. Dogecoin was a joke. There's no real utility behind Dogecoin until Mark Cuban and Elon Musk started tweeting about it. So this is scalpers. Scalpers, you just look at the market to see, okay, who's got the most liquidity and the most volatility and price fluctuations, and we can make some money. So crypto scalp traders target small profits by placing multiple trades over a short period, leading to a considerable yield generated from small gains. So you guys remember what I was doing? How I was manipulating the market on LBank on certain coins. I literally was manipulating it. I would put in a high buy order or sell order and a very low buy order, big one. And then I was doing other trades in between. And since I was considered the whale, the rest of the market was reacting to me. So I was able to get all of my hits, every single one, like 95% profit every single time. And then since I was doing it live, some of you guys figured out what I was doing and you were able to undercut me. Leonard Long, Marnita Casa, you guys figured it out. Marnita figured it out, and she was doing a consistent 2% on every single trade, like clockwork, back to back to back to back to back to back to back. You guys remember that? If you who else was learning, was profiting off of that during that time? That was December and January, earlier this year. So that's scalp trading. So scalping strategies require knowledge of the market, even though it is a short-term trading strategy. To capture the difference between supply and demand, scalpers use a spread, which involves buying at the bid price and selling at the asking price. If traders are prepared to accept market prices, this approach permits making a profit even when orders and sales are not changed. Charting speed, consistency. There we go. Charting speed, consistency are the critical elements that make scalping possible. For instance, scalpers use technical analysis and various value gaps caused by bid-ask spreads and request streams. Critical elements that make scalping possible: charting, speed, and consistency. That's right. What is that, Patty? I remember that. I was too slow though, but the strategy you taught, for sure, yeah, it works 95% of the time. If you wanted to sit there and you want to literally, when you learn this skill, you're a walking ATM machine. Remember on my last 5-day challenge, James Davis was talking about how at any given day he could roll out of bed and make $20,000 if he wants to, doing some trading, scalping for about maybe 1 or 2 hours, and then climb right back in bed. Well, how's he doing that? Well, he's going to be trading with a whole lot more. He might be trading with 100 or $200,000. But what if you get a 2% profit, 3% profit on 3 or 4 trades? Bam. You got it. I showed you guys that. When I did my very first trade, I made 3% on my own trade. Now, I was only trading with $30, so that's only pennies. But I was excited by the fact that I made 3%, because then I thought, what if I was trading with $10,000? That 3%, that's $300. What if I'm making $300 a day? That's $9,000 for the month. Not me having to worry about some bot doing the trading for me, trying to guarantee me 1 to 3% a day or a week. I make more money trading by myself. Now, for me, though, unlike James, I didn't like it. See, some people, it's a lifestyle. Some people love it, and some people don't love it. It's not that I don't really like it. It's just not my style. So I modified my style now, where I'm not looking at the charts 24/7. I got so freaking addicted to it that it was impacting my life. I was having my phone and looking at the charts, and what broke the camel's back for me was I was spent like 5 hours on certain trades, and I was waiting for it. I knew I was going to hit the mark, and I was getting very precise. I knew it was coming. I ran to the bathroom, came right back, missed it. I was like, "Oh, you've got to be kidding me!" So I said, "Okay, I can't do this." So I modified it, but it's good to know the skill, whether you're actually using it or not. Scalpers generally operate by creating a spread or buying. Yeah, I read that. Additionally, traders can utilize. Yeah. Scalpers can reap benefits over time continuously, but how do crypto scalpers make money? The different scalp trading tools used by crypto scalpers to reap gains include leverage, range trading, and the bid-ask spread. Leverage describes how much traders contribute from their pockets to increase their margin. Some scalpers use this method to increase the size of their position. Range trading. Scalp traders who engage in range trading watch for trades to close inside predetermined price ranges. For instance, some scalpers utilize a stop limit order, which executes the trade at future market values. Here's the only problem with this strategy, and a lot of people, you hear people who lost all their crypto or millions of dollars in crypto because of an exchange go down. You're like, what in the world? Why did they have so much money sitting on an exchange? Because this is what they were doing. They were using stop limit orders so that if the market were to drop, it automatically sells their order into USDT. And then they wait, and then they buy the dip back in and make their money. And they can do this without having to stare at the screen. They just set it and walk away. The problem with that is if the exchange gets hacked, if something goes down, close, you just lost all your money. So I came up with the rule. Never use exchanges as your wallet, for one. 2, only have money on the exchange that you're actually going to trade with. The rest, you have in a cold storage type wallet where you control your private key. And when you make a profit, you take your profit off the exchange. That's a rule, but a lot of the big dogs are lazy in this, and they just want to trust the exchanges. They don't know any better. They're gonna learn the hard way. Bid-ask spread. By employing this strategy, scalpers can take advantage of the significant price discrepancy between the highest bid and the lowest bid ask. Yeah, I did that. Arbitrage. Arbitrage is really more for bots, where they buy, purchasing, and selling the same asset in different marketplaces. Bots are good at that. They may buy on Bittrex and sell, and then move it over to Binance and sell for the difference, because every exchange, the price is not the same exactly. Let me show you an example. So if I've got CoinGecko Right now, it's got Bitcoin at 26,163, right? But what if I pull up Coin Market Cap? They're going to have a different number. Okay, so we've got 26,192.57 on Coin Market Cap. Bitcoin 26,163. Doesn't seem like that much different. It's $40 difference. But if you have a bot that's doing this over and 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 over, that adds up real quick. That's whenever you hear the term arbitraging. They're buying on one and selling on another. So and again, it's difficult to do for an individual unless you are really watching the charts and you've got a lot of money there and you're doing the fees. Some people, they say, you know what, I'm going to spend 3 hours a day just arbitraging. You can do that. People do that on the stock market too. All right, where I'm at here. I don't want to read all of this. Is crypto scalp trading worth it? Developing your ability to interpret charts and expanding your understanding of, here we go right there. So Monday morning, we're going to talk about reading the charts again for those that need a refresher course. So developing your ability to interpret charts and expanding your understanding of various crypto trading tactics are the keys to becoming a good crypto scalper. In general, scalp trading can be aggressive and demanding and may be highly draining for untrained brains because the return from each trade is too small. More substantial capital is required to produce meaningful outcomes. And of course, as there is a no one-size-fits-all crypto trading strategy, one should utilize techniques that best fit their risk. And that's important there too. Like I was teaching my cousin, Miss Marnita Casa, over the years, that I can show you what to do, but until you actually do it, you're not going to figure out what works best for you. So when we started doing this and she started doing her own trades, she figured out what was best for her and was knocking out 2, 2, 2. I'll show you an example. I'm proud of what she did. So let me see. Where did I save that chart? Under documents. Yeah, investment tracking spreadsheet. Okay, let me stop sharing screen. Just give you guys a little sneak peek. Share again. All right. So, I don't like it. It's so small. How do I make this bigger on the screen? Hey, I could do it if I was on Zoom. How can I make this bigger for you guys? No, I don't want to shift the cells. Oh, that's not going to work. Okay, well, I'm going to have to just show you guys. So, for example, Marnita was doing a consistent 2.3%, 2.19, 2.19, 2.19, 2.41, 2.19, 1.97, 1.08, 2.3, 3.31, 2.5, 1.9, 2.2. Do you guys see this pattern? Consistently on every trade, profit. And this adds up. She figured out what was working best for her. Whereas I was doing it a little bit differently. So I was getting 420%, 537, 14.25, 5.91, 5%, 14%, 15%, 4.6, 9.3, 8.9, 35%, 27%, 17%, 5.8, 19%, 7%, 20%, 29%. Oh, I had a loss one day. No trade actually happened there. So it came out 100. 26%. Any losses here? No, I don't do losses. All right? I don't do losses. The only way you lose is when you sell. I'm patient. I'll wait. I don't do losses. So my performance, Marnita's performance, is much better than any bot. She didn't do any losses. I'm looking at this. There was 0%. But no losses. 1.97, 1.75, 1.64, 1.31. That adds up. All right, let me shut that down. And share screen. So learning the skill set is everything. Here we go. All right. And those of you guys in the diamond class, once we finish NFTs and IoT, we're going to go back to how to trade crypto, advanced crypto and how to trade crypto. Get some refresher courses. The only issue is now it is difficult to find any exchange that you actually can do it on. I can still mess around with LBank for now, but I haven't been using any exchanges to do any trading with all the attacking of the SEC in the US right now. But you still got to learn the skill. All right, what else we got here? Elon Musk's SpaceX writes down Bitcoin worth 373 million. SpaceX reportedly wrote down the value of its Bitcoin holdings by 373 million over the past 2 years and sold an undisclosed amount of the cryptocurrency. According to reports, Tesla, another company run by billionaire Elon Musk, has taken a similar approach with its Bitcoin holdings and sold an undisclosed amount. Okay. On Thursday, the Wall Street Journal reported that Elon Musk's SpaceX has written down its Bitcoin investments, citing documents it has seen. SpaceX wrote down the value of Bitcoin it owns by a total of 373 million last year and in 2021, and has sold the currency. Tesla has taken a similar approach with its Bitcoin holdings. Musk has posted about cryptocurrencies. Okay, I'm curious. I know he's having financial issues. Twitter, he spent a fortune to buy it, and it is not profit right now. And he's bleeding money. So I could see if he sold some of his crypto assets, which also is not smart. If you've got 373 million worth of Bitcoin right now, do you know what that will be worth in 2 years? So that looks like a desperation move to sell that crypto. This led to numerous headlines claiming that SpaceX had liquidated its entire Bitcoin holdings, so now we're getting somewhere. So is this why the market's dropped? He just dumped $340 million worth of Bitcoin on the market. However, many people took to social media to point out that writing down investments is a standard accounting practice for businesses and does not imply that the investments have been sold or liquidated. That's not hard to figure out. You can find out if you see that amount of Bitcoin moving, the wallets. For example, a company might write down the value of its inventory if its market value has declined, yet retain the inventory until it is no longer needed. Tesla and SpaceX adopt similar Bitcoin approach. Although Elon Musk revealed in July 2021 that SpaceX owned Bitcoin, the details of the company's BTC holdings remain largely undisclosed. In contrast, there is greater transparency regarding Tesla's Bitcoin position. According to the Wall Street Journal, both companies have adopted a similar approach to their Bitcoin holdings. During the first quarter of 2021, Tesla purchased Bitcoin valued at 1.5 billion. So he bought the freaking high. 2021, that's when Bitcoin went to 69,000 a coin. The company subsequently trimmed its Bitcoin stash twice, once in first quarter 2021 and the other instance in July last year. The same year, SpaceX reportedly wrote down its Bitcoin holding. Anybody else, you guys have let me know yet, what is his obsession with the X? If you look at Elon Musk's entire career, every company, he's always moving towards using X in it some kind of way. There's meaning behind this. In fourth quarter 2021, Tesla sold 272 million in Bitcoin. Musk clarified that the sale was to prove liquidity of Bitcoin as an alternative. Really, I don't believe that one bit. So you wanted just to prove a point. So you sold 272 million. Well, he is one of the richest men on the planet. So 272 million to him. Everybody else is like, are you crazy? Just to prove a point? That also, remember, guys, when we talked about security and we talked about, is it possible for the Bitcoin blockchain to have a double spending, to get hacked? Is there technology possible? And it is possible. It is just insanely expensive. It would cost billions of dollars just to change and have 51% ownership of one block. And that one block is only worth 6 Bitcoin. So would you spend billions of dollars for 6 Bitcoin? Well, someone would only do that to prove a point. And I said it. You guys remember me saying it. Only one crazy enough and that has the resources to do that would be Elon Musk. And here we go. He did this just to prove, in his own words. So that's why I always look at anything Elon Musk is doing with a side eye. He's a spoiler. I don't trust him at all. And he has too much influence. He has the power to manipulate the markets. In July last year, the company sold approximately 75% of its Bitcoin, which added 936 million in cash. Now, again, you spent 1.5 billion, but you're going to sell for 936 million when in just 2 years, this 1.5 billion might be worth probably 4 billion. That doesn't make sense. Now, I can't put myself in the head of Elon Musk, but I will say this. I have been doing my own little research, and I'm questioning his genius status. I'm questioning that. It's looking more and more, in my opinion, that he is a representative, just like Sam Bankman-Fried, just like what's that kid's name? The founder of WorldCoin and ChatGPT. I forgot his name. We were covering him 2 weeks ago. That they are representative and they were put in place to do certain things. I'm seeing it more and more. And Elon Musk is riding off of the, no, not Sam, was this Altman? Sam Bankman-Fried, Altman. What's his first name? Altman. But anyways, I'll have another day for Elon Musk to prove it. We are certainly open to increasing our Bitcoin holdings in the future. So this should not be taken as some verdict on Bitcoin. All right. I don't want to, this is going to be a little long. This is an opinion piece. I'll kind of shoot through this. The opinion piece is 3 things Coinbase says will determine the future of crypto. CEO Brian Armstrong has outlined ways for the industry to beat crypto winter, including a new lobbying group. Okay, yeah, okay. Remember, I told you guys, you're going to have a lobbying group that's going to go down to DC and lobby on behalf of crypto. All right, I'm not going to read everything, but we're going to scroll through this. Despite fighting what must be an incredibly cost-draining battle against the top U.S. SEC, Coinbase is in a period of fluttering activity. Last week, the biggest publicly traded crypto company launched a new blockchain, Base, which has seen a surprising amount of uptake, largely due to a couple viral apps. And today, how many of you knew that last week Coinbase launched a new traded crypto company, or a new blockchain called Base? I heard of it, but I didn't look at any details about that. Today it announced the formal founding of Stand With Crypto, an independent nonprofit organization for advancing pro-crypto legislation. I predicted this was going to happen. So I said we're at the turning point now. At a time of low crypto volumes, meaning low cash flows for a company that historically has derived almost all its revenue from trading fees, Coinbase has started talking more and more about what the future of crypto adoption will look like. First, notably, as transaction fees have slipped, Coinbase has seemingly found a more sticky revenue source with the subscription model. All right, we're still back. Including blockchain scalability, utility, meaning non-financial crypto use cases, and righting the wrongs of incomprehensible crypto regulation in the US, or lack thereof. A topic it knows only too well, considering Coinbase is one of the few companies ever to actually leap over the trust and knowledge gaps, keeping people out of crypto. It's worth tuning in. In a sense, the first two themes are two different sides of the same coin, or at least there are ways of addressing issues that are closely related. Armstrong seemed, oh, now you're getting my attention. Armstrong seemed especially bullish on current scaling solutions, including Bitcoin's Lightning Network. Ding, 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 ding. Dark fusion technology. Bitcoin Lightning Network and its own Ethereum scalar base. No surprise there, especially considering the company has been signaling a lightning integration ever since Bitcoin NFTs clogged up the chain, but it still attracted attention. Blockchain scalability and utility are tech issues, and technologists can easily imagine technical solutions. If you did not watch my reaction showcase from Wednesday, you want to do so. So why did I come out of retirement on this whole Vara project? It wasn't because some new cool game is coming out. It's because the technology that they're bringing to the table is groundbreaking. That's why I came out of retirement. They are solving a problem with scalability on the Bitcoin layer 2 network. So it's possible the crypto industry in its 13 years of existence has over-indexed the type of thinking about infrastructure, the build it and they will come type of jazz, but in a real way, non-financial use cases for crypto were largely out of reach for years. With blockchains being a seesaw where anytime there's a meaningful influx of user transactions, fees rise and price most people out. Yeah, on the Ethereum network, that could change with layer 2s like Arbitrum and Optimism for Ethereum. Yeah, we got something better, which, as Armstrong noted, have meaningful adoption over the last 6 months. When making predictions, all I can offer is counterfactuals or affirmations, but we'll see. Build a longer or better seesaw and more people can fit without immediately spiking TXN transaction costs. And with people will come demands for message services, social media, and so on. What did Dom say in their showcase? Every time he thinks of one extra use case, there's more things that can be done. See this? When you solve one problem, it opens up for demand for now. What about messaging services, social media, metaverse, and so on. The last point I'll make is that when coming up with examples for non-financial uses, Armstrong did immediately go to decidedly financial examples, things like stable coins for payments, DeFi, NFTs. These have already gotten substantial traction. But I think with layer 2 solutions, layer 2 solutions. What was the website again? I thought I had that saved. Dark Fusion. Yeah, there we go. Multi-layer Bitcoin-based smart contracts. The future of Lightning-enabled smart contracts. Decentralized exchange. Easy to use developer tools, introducing simple contract language, simple tokens, staking, real NFTs, batching, blockchain as a service. This is why I came out of retirement. Layer 2 solutions coming online. These can get much, much bigger. And later, but if we can make the utility that much better, the payments faster and cheaper globally, more and more people will use crypto every day. That is true. And that's how indirectly it will help. It will just help our business grow. So I'll leave it there. All right, I want to skim this stuff. I want to do the main point here. Stand with crypto market. Okay. So yeah, stablecoin bill. Read this part. This is important for two reasons. To stand with crypto, like many blockchain lobbying groups, will seek to influence the direction of U.S. laws covering and designed for crypto. This is important for two reasons. One, there are two live bills that, if passed, could transform the industry, i.e. the crypto market structure bill and the stablecoin bill. Both passed by the House of Financial Services Committee and the House AG Committee with bipartisan support and are heading before the Senate. And second, there's a growing chorus of crypto advocates who think crypto's existing lobbying network in DC has largely failed the industry. Look around at the lack of crypto regulations and regs and legislation, and you might agree. But then it's not an easy job selling crypto, especially after the market gouging we had. Coinbase may have better luck with an aligned lobbying group rather than funding others. Or it might be entering at a more opportune time. Stop right there. Who did Coinbase align with? BlackRock. Do you think Larry Fink has influence? There are certainly going to be more chances to mold crypto regulations going forward than 5 years ago. That is true. Canada. See, but the world of politics perhaps even less predictable than tech adoption. That is true. There are two imperfect models ahead. Crypto reforms in Canada that have started to drive out businesses, and the European Union, which recently passed a block-wide MiCA regulatory package that is seemingly turning Europe into a crypto hub. There's obvious problems with the comparison, including that Canada is a much, much smaller market than the U.S. Yeah, because my state of California is a bigger market than Canada. And Europeans have greater tolerance for government oversight than we do. But the point holds, which way, USA? All right, let's skim this. Okay, that's about it there. All right, that is it. There was this one last, but I don't want to cover this today. This is what Ethereum is a dumpster fire, says Charles Hoskinson. He is the creator of Cardano. Despite assurances to discrepancies between Cardano's theoretic network capacity. So he's just basically saying we got a better blockchain than Ethereum. Use us. Yeah, that's all he's saying. Transactions per second with 1,000. Simulations have shown that each Hydra head can currently process about 1,000 transactions per second with 1,000 staking pools, each of which process 1,000. What was the Dark Fusion talking about? 1 million transactions per second. All right. Let me stop sharing. All right, that is it for Crypto Talk this morning. I'm going to end by playing a video by Larry Fink. Listen to it very closely. Don't follow what they say. Follow what they do. You are at the right place at the right time. Only thing you have to do now is find a vehicle that's going to get you to where you want to be. That's going to ride this river of money that we need to start taking action and taking action right now. What's happening next is I am not doing anything tonight, but I will be doing a VARA presentation and our team call tomorrow night. If we still have electricity and power or internet for that reason. If we don't, then I will have to cancel it. But I still have planning on doing that. We got to see what this tropical storm looks like. And I will be back for Inner Circle Crypto Talk Monday morning if we have power. We'll see. For those of you who you're here for the first time, you're like, wow, I like this was great information. I want to be a part of the Inner Circle that we do Crypto Talk every morning. Then there's a site to go to. ILCAsecrets.com/sales page if you want to be a part of our inside community. I only do this for the public once a week, but I'm broadcasting every day talking about crypto, staying on top of this and what's going on. So with that, I am going to play now this must-see video, BlackRock, and leave you on that note about Larry Fink. Take care, everybody. I'll see you guys tomorrow night. Bye-bye.
Is it true that you're building out a cryptocurrency capability?
No. I mean, we're looking at it. We're looking at blockchain technologies, and we're looking at all the
But blockchain isn't crypto. Blockchain is just the underlying technology. Well, don't your clients want crypto exposure?
No. I don't believe any client has sought out crypto exposure.
Really?
Yes.
But at some point they might. Do you need to be prepared?
I don't, at the moment, no. I have not heard from any one client they're looking to buy a cryptocurrency at this time. But right now, I can tell you it worldwide, I have not heard from one client who said, I need to be in this.
BlackRock, the most powerful asset manager in the world with a $10 trillion portfolio, is investing in cryptocurrency.
This is not going to be an easy task. Capital is moving, and it's going to move very rapidly. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement.
Do not be fooled. Don't let Larry Fink's friends go on TV and convince you not to buy this time around. While Hillary and friends continue to sow fear, uncertainty, and doubt about crypto into the minds of the general public, BlackRock has been forced to disclose that they're into it.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in an ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. I mean, the transformation, think about it, instantaneous settlement, bonds and stock, no middlemen. We're going to bring down fees even more dramatically. As for me, I don't have to vote on any shares anymore because the beneficial owner will do all the voting.
And by the way, this isn't the first time he's said this. Larry Fink has been getting more and more vocal on this.
This is one of the reasons why I'm focusing on the whole idea of blockchain for securities. I look forward to the day when we could tokenize stocks and bonds that every stock and every bond, we could identify immediately who is the beneficial owner. And this is why we're working on it. And every beneficial owner, from an individual to an institution, have the ability to vote, to democratize every single vote. And that's where we want to take this, and we're leading that effort. Oh, I actually believe most of the companies are not going to be around. I still believe that. I do believe
because they're now real, they're frauds, they're what?
Well, I mean, think about FTX. I mean, you could look back now. FTX created its failure was it's creating its own token. It was not a DeFi. It wasn't a ledger that was open to the world. It was a closed ledger.
Right.
It was not distributed. So the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system.